Hello everyone once again and welcome to It's Crypto's trading channel. In this video we're going to perform a multi-time frame price action analysis on Iotx USDT because things are starting to get very interesting for a potential trading opportunity. So let's get right into it. As always, we're going to keep this video as educational as possible. So starting here on the monthly time frame. What can we see here on the monthly time frame? Everything is clearly bullish. The market has finally broke above this level of resistance. So we have a clear level of resistance all across this zone. The market broke above this level of resistance with this large impulse to the upside. As you all know, after an impulse, the market makes a correction to retest previous resistance as new support and gather the liquidity in this area before potentially making the continuation to the upside. Also here on the monthly time frame, we have this candle here. This was the previous monthly candle close. We have a large green body and a large wick. As you all know if you follow our videos, when the market prints this candle here on higher time frames, a lot of the times the market tends to fill in this wick. This is a highly probable pattern within the market, and I do expect this wick to be filled and the market to go and make a new higher high from a monthly perspective. Dropping down to the weekly time frame. So here on the weekly time frame, everything is also clearly very bullish. The market has this beautiful impulse and correction. If we want to measure the correction, what we need to do, we need to take our Fibonacci from the low to the high of the impulse. This shows us that the market is currently correcting, retracing to the 0.786 Fibonacci and showing a rejection to the upside. Also here on the weekly time frame, we have the same candle. We have this green candle here with a large wick to the upside, and I do expect the market to fill in this wick. If we want to measure the next impulsive move, what we need to do, sorry about that. If we want to measure the next impulsive move, the next impulsive move, what we need to do, we need to take our Fibonacci from the low to the high of the most recent correction. So from this low, bearing in mind this correction could go a little deeper, but currently speaking, from this low to this high, this is the weekly correction, and the minus 0.272 fib will be our next weekly upside target. And this is where I potentially see the market making another higher high. So we have higher high, higher low, higher high, higher low, higher high, higher low, and the potential higher high at this zone of around 0.3. So around 30 cents here. Let's drop down to the daily time frame. The monthly and weekly are clearly bullish. Let's drop down to the daily time frame and see what we can see from a daily perspective. So the daily time frame from a long-term perspective is clearly bullish here following the weekly and monthly, but in the short term we are in a corrective downtrend. If we take our trend line from this high, you can clearly see the market is in a corrective downtrend. We have a rejection here, 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 not quite touching our trend line, but another two strong rejections exactly at this trend line. This shows us that this area is acting as a strong resistance. This area is a strong level for sellers. Every time the market comes up into this area, sellers step in and push prices lower. What I can also see here on the daily time frame is a falling wedge formation. If we take our trend line again from this low into these lows, we clearly have a level of support here and here all across this zone. This is a beautiful falling wedge formation. So as you should know, a falling wedge is a very simple price action pattern, which is a reversal pattern when the market is in an uptrend and it makes a corrective move in the form of this falling wedge, which is just a correction with the range tightening. You can see the range is larger here, and as we go further down the wedge, so deeper into the correction, the range begins to tighten until eventually the market will break out to the upside and go and complete the continuation here. So as I was saying, on the daily time frame at the moment, things are too early to be looking for a potential entry with leverage because we are in this corrective downtrend. We clearly have this level of resistance with the trend line here, and we also have this horizontal structure level here. So we have a clear level of support which the market bounced off here, Then we broke it to the downside, came and retested this previous support as new resistance in confluence with the descending trend line, and shown a strong rejection to the downside. So we have a strong level of resistance all across this zone. And whilst the market remains below this level of resistance, we could easily come into this level, once again reject, and come back down to hunt the liquidity that will be in this area. What we first need to see before we can look for an entry to long, we need to see a daily impulsive move close above this level of resistance. If we see a daily candle close above this area will once again become support, and we will wait for a correction to this zone. You can also see that this has the potential of forming a nice W formation here. So we have the potential of forming this very nice W formation here. And as you all know, if you follow my videos, after the W formation, we expect the market to make a correction to complete the pattern at the neckline. So as I was saying, we'll be waiting for a daily higher high to close above this zone. If we see this, we will wait for the correction to complete the W formation. And this is the golden area. This is the area of interest. We will be waiting all inside of this area with students for the market to come into this level of demand. And then we will be potentially capitalizing on the next impulsive move to the upside. Our entry will go somewhere around this zone. We will use the 4-hour time frame to determine a precise entry according to the rules of our strategy, and our stop loss will go well placed below any 4-hour structure. Our take profit we've already identified, and this gives us a very nice potential 300 to 400% return on our investment if we use 5 times leverage here, which is highly likely. If we go for a spot position, this is still a very nice return of 100% here. And all in all, this is the price action that I expect to see from Iotx. Remember, trading is reactive, not predictive. We can't simply open long positions here because we could easily reject this zone and come to sweep below these lows, to sweep the liquidity below these lows. So we need to first wait and see a daily higher high above this zone. And then on the retest, we can look for an entry to long all inside of this area to capitalize on this next impulsive move.